welcome to your Sunday installment, everybody. This time we're looking at Cathie Wood, because based on what she has been saying recently, it does look like in some aspects she is anticipating the worst. So as we have been doing in this series, we're going to be looking at what she has been saying and where she believes the markets are going to be moving to. So we're going to start off quickly by looking at who Cathie Wood is. Now, Cathie Wood is an American investor and founder and CEO and CIO of ARK Invest, which is an investment management firm. Cathie is a controversial figure. Some think she is an innovative genius investor and others see her as a clown. Now, the reason for that is because when we look back to her investment firm, as we have seen, we know that this has seen massive declines. So if we look at their 13F portfolio as of Q2 2022, we saw it decrease from 23.96 billion to only 16 billion in that quarter. So clearly there was a massive decline there, and that's why a lot of people think that her strategies for these innovative companies is just too risky, and therefore they label her as a clown. Let's have a look there at what she is thinking based on what we're seeing in the market right now. So she has been looking to the Consumer Sentiment Survey. And to quickly go over what she's referring to there is the Michigan Consumer Sentiment Index, conducted by the university of the same name. So what we're seeing here is a very low point on the survey, perhaps lower than what we saw in 2020 and coming to the same level of 2008 and the financial crisis. This is most likely due to decreased purchasing power, she believes, which we are seeing have an effect on the way people want to spend money as well as the way that they can spend money. And this is reflected in some of the questions which people are asked to answer. So what we see here is one part of the survey which asks customers, is now a good time to buy a car? And this data is apparently, according to her, reaching points now lower than what we saw in 07, 8 and 9, so around the financial crisis, showing that people are becoming more and more fearful. In the early part of the year, auto sales were up quite strongly, and Cathie believes that companies were simply building inventory, waiting for chips to arrive due to the shortage that we saw earlier in the year. And whilst we have seen orders for new motors being fulfilled, the demand is now looking like it has been met and the chip shortage has alleviated, which has meant that many inventories, both in the auto sector but across the board, are starting to back up as consumers are spending less, not purchasing, due to real terms income cuts from inflation, from things like job layoffs, and that is going to have an effect on the purchasing power and of course the wider economy, and that's something which Cathie does see, and I completely agree. Now, Cathie does actually have some fairly bullish opinions if you ask me, and these include things like believing that the housing market is going to remain stable and strong, something which many do in fact disagree with. Now, her reason for believing this is because migration across the US is still pretty strong, and city residents also want to have a second property to relax in, and she believes that that is going to keep prices quite stable, or at least that is what I was able to get from it. So capital spending is still strong, which is of course in her eyes a good thing, and we are seeing this as companies are trying to find innovative ways to save costs and fight against inflation and expenses, which will lead to increased productivity and efficiency overall. So it's interesting that companies are actually spending on new innovative ways to cut costs, and I agree with her. Now, other key opinions from Cathie include things like, we will see a resolution to the oil price shock within the next year. Now, that's something which many do disagree with, but it's entirely possible, and again, I'm not here to dispute it, I'm just here to look at what she has been saying. She also believes that the internals of the market in the past year were not very good, and I couldn't agree more, to be honest, and she says that although this was the case, equities still moved to an all-time high. Now, what's very interesting is that the ratio of new lows versus new highs is as high as it was back in '99, and she says it's interesting that innovative stocks are getting hit harder whilst new lows, or rather innovative stocks are hitting new lows whilst value stocks are climbing to new highs. So if markets moved due to, say, interest rates, she believed that more mature growth companies, like Meta for example, would be hit harder than these newer companies, as these newer companies have already declined so much, they don't really have much room to even go down. Now, she also notes that companies are facing competition. An example that she gave was Facebook or Meta versus TikTok, and the question of Facebook, which was at one point basically a monopoly, is now facing a lot of difficulty against a platform like TikTok. So it will be interesting to see how that plays out, and there are other examples that we can give, but that is a pretty obvious one. Now, in conclusion, what we're seeing here is something very different. Cathie's opinions are not like others that we have looked at before. She's still quite bullish on a few things, or at least that is what we can surmise from this, because we can't get her sentiment 100%, but it does look like she is still bullish on a few sectors again, such as housing. She believes that innovative stocks are near enough to the bottom now, as they have continued to decline for months, that they are at greater risk, if you will, of inclining, but she believes that more stable stocks are at greater risk of being overinflated due to strong pumps and rallies throughout the past year. So guys, it's been a short one, but I wanted to hear what your opinions on this were. Do you think that we're seeing overvalue in more mature stocks? Do you think that other stocks have more room to run? Do you think the housing market will remain stable? What do you think is going to happen? I'm really interested to see if you guys agree with people like Cathie, or if you're in with people like Michael Burry and Ray Dalio. So what are your opinions? Do drop me a comment down below. Thank you so much for watching till the end, and goodbye.